Hey there, Russell traders. David here of TradingFibs.com to bring you the Russell recap for June 19th, 2013 FOMC meeting day. As always, please seek financial advisement when trading with your money. These videos are for educational purposes only to support your trading plan, your knowledge in the market, see what's going through my head on any given day, and why I take the trades or why I don't. Please make sure you have a solid trading plan and never move your stop when placing a trade. Let's jump right into the four major market indices. You could see that price action pretty much chopped up most of the day until the meeting minutes came out. I'd say probably over the past year, FOMC hasn't really made that much of a move, perhaps some months in and out there, but this one took a nice up and down, chopping it up for a good hour and pretty much staying out of this until the market decided to pick a direction and then bring on all four major indices back down. By rules of 25-minute open range, if an entry is taken and exited, always looking for the re-entry on the way down, either picking the lowest low and then once price action breaks down below that, entering again as long as EMA crossover and Heikin Ashi bars are following through. The TF, the Russell, having a nice entry at the first part of the morning. Market chopping up until the meeting minutes came out, letting it get its buyers and sellers out of the way. Market decided to move down a little bit lower, bouncing back up and then coming back down. Looking on our market internals for the Russell, again, a very quiet morning, offering a little bit of movement to the downside. FOMC meeting minutes giving some huge ranges. Advancers and decliners, AD line really coming down all the way to negative 1200. We really were under zero the entire day, so bias to the downside, including market breadth also under the zero line and eventually tanking towards the end of the session with a negative 13 to 1 on the NYSE and negative 2.5 on the NASDAQ. So jumping right in and looking at our pivot levels, take a look at the daily support and resistance line. The daily gap up at 996.2. So market opened up around the daily gap and came down to the daily pivot. Daily pivot jumping around between the daily pivot and the S1 the majority of the session until coming under daily S1 and all the way down. So daily pivot being a line in the market open, tucking under the daily pivot, which gave a move to the downside on the 25-minute open range. So underneath the pivot, underneath the 25-minute open range, under the daily pivot, entry number 1, setup number 1, side action till FOMC meeting minutes came out, waffling in between, and then coming under the S1. Looking at our 1 hour open range chart, including Surrey range, 30-minute support and resistance levels. Once price action came out on the FOMC meeting minutes, coming down to Surrey range S3, coming all the way back up to the pivots and chopping it up in between S1 and S2 and then tucking under. So momentum, again, staying out of this here in the middle here during the meeting minutes is something that I avoid. Momentum, even though we had a nice drive here, which could have been an opportunity for entry, but once it came under S2 with other major key pivot lines was an entry as well. 3 entries today, 3 possible entries on market momentum. Here we are, have our Camarilla pivot lines, really price action coming down to Cam L3, hanging around price action, and then FOMC meeting minutes, and then coming under. So momentum on the Camarilla underneath the Cam L4, momentum underneath the Surrey range S3, momentum underneath the daily pivot first, but then momentum underneath the daily S1. So any any decision to enter in the market would have been much better if you, once price action had broke under these three major pivot lines. Looking at the 25-minute open range, key levels was really my weekly R1 here. You can see the price action broke down underneath the 25-minute open range. Our daily pivot was in this area as well. So here we have some sideways action, no action taken. First move would have been underneath the 25-minute open range down to the weekly R1. Waiting for the sideways action, weekly R1 holding price action, FOMC meeting minutes, and then coming under weekly R1, which would have lined up with the other key support resistance levels and taking you all the way for two more setups for the day. Looking at the Heikin Ashi charts, you can see which were the setups. So here we have a range chart, 10-tick range chart with Heikin Ashi bars, 25-minute open range, sideways action, first move of the day, first setup. You can catch some pictures on my blog and a little bit more description. But here we have weekly R1 with a move underneath the 25-minute open range. Market internals was to the red, to the downside. We are underneath the pivot. Heikin Ashi bar, solid tail here. Entry, depending on where you put your stop, you might have been taken out here as price action did bounce back up to the 25-minute open range, but weekly R1 would have been the target. So you might have gotten some ticks out of that before price action came up. If your stop was up here at the high, again, we had 534 EMA crossover. You could have written it down to the weekly R1. And had you remained in the trade with just the 5 under the 34 EMA, you could have actually wrote it all the way down to the daily R1, which was another target, including the Camarilla L4, which we showed in the other charts. So weekly R1, Cam L4, and daily R1 were the three key resistant lines on the way down. 534 EMA crossover, that was setup number 1. FOMC minutes came out, price action vacillating intensely over the next next 60 minutes, finding support amongst many of these support resistance lines, waiting for the market to settle. We could see that once Camarilla L3 was established as a resistance to the top side, again, 534 just chopping it up here. I would have never taken an entry anywhere here. The next line I would have looked at for an entry, which was 534 EMA crossover here. Cam L3 is showing resistance to the upside, so price action not coming up above that. I might wait until at least I come under the daily R1 to take an entry, so gotten some significant selling here. If you had just entered on the 534 EMA crossover, that would have been an opportunity as well to establish entry, knowing that you still had a Cam L4 here and a daily R1, which did show some resistance to the downside. So the entry with momentum was right here underneath the daily R1, even though you could have entered a little bit earlier over here. Had you stayed in that trade, you might have taken a little sideways action here. EMA crossover over here, up to the daily R1, which showed some resistance to the upside. You might have gotten out by this point, and then coming all the way down, we see another possible entry. If you had waited until underneath the low here at 982.10, you could have waited until the last. This was after market hours, kept coming down. Again, this is 15 minutes to the close, was another possible entry, which would have been setup number 3. If we had taken a Fibonacci target, place that on the crossover, we had two possible setups of Fibonacci. Right here would have been 1 if you had been in from the long term previously and not gotten out, or taken a entry over here and coming down to a couple fib targets. Again, using that as another tool in your basket. Again, using the 4 EMA was another option here. Coordinating that with the 534 EMA, here you have your 5, 13, 21, and 80. So first entry of the day was right here. So we have 5 under the 13, 21, and 80. If we line that up, we actually have that over here sideways together. So we had a nice tuck underneath the 25-minute open range on both down to the 987.10. 987.10, which lined up with our 97.10. That would have been a little higher, which just underneath the daily R1. And then FOMC minutes keeping you out. And then here was the second next possible setup to the downside. Again, what's nice here and why I would have taken this and maybe not had waited until I came under the daily R1 or some other significant pivot lines here, support resistance, excuse me, is that I had consolidation of the 4 EMA lines and then coming down underneath. Again, this is post 1 hour of the FOMC minutes, so the market to me has already decided and picked a direction with market internals decreasing at this point. This would have been a nice entry depending on where you gotten in, but setup number 2 and setup number 3, again, I have this waffling around the 5, crossing in between all these lines, and then eventually picking with 15 minutes to go here at 12:45 East Coast time. And we have, let me move this chart up for you. And then we have a nice tuck under here, 12:45, and the EMA, the Heikin Ashi solid selling, staying under the 13, 21, and 80, which would have been setup number 3. Again, you could catch these charts on my blog, which give you more of a more detailed analysis. So 3 setups for today. FOMC minutes today. Sometimes a decision to just sit out for the day can be the best. Let the market decide to pick its action. But again, if market direction is chosen after a 30 minutes to 1 hour window, looking for key support, key resistance to the downside, if that's where the trend is setting price action, either look for the lowest low and then come underneath that, or look for a crossover on several other charts. My 4 EMA. Heikin Ashi candles keep you in the trade with solid bars and tail down with red sell signals. Gives you some ticks out of that. That concludes today's wrap for June 19th. Feel free to stop in by at tradingfibs.com for any social media outlets to obtain more information. My trading mantra of know one thing, know it well, rings true for all markets. I love the TF. That's what I trade. I watch the ES. I watch the YM and NQ for my fellow traders. Same method, same trading plan. 25-minute open range is my discipline. You can always find me every day on Twitter at Trading Fibs. And as always, I leave the crystal ball to the experts. I only trade what is in front of me and on my charts. Until tomorrow, have yourself a Blue Zone day.